What's up, investors? It's the Russian dude, and looks like, according to Goldman Sachs stock market experts, every single time there is a big decline in the stock market in America, it started to already severely, relatively speaking, affecting the entire US GDP. Specifically, according to their mathematical calculations, every single time, at least at the moment of recording this video, every single time the stock market declines 10%, it reduces the American GDP by 0.45%. So the main question of this video, if the stock market already has such a big impact on the entire US gross domestic product, will the Feds intervene maybe a little bit sooner or maybe a little bit harder as soon as possible in order to intervene and save the day? Moving forward, the Goldman Sachs experts also mentioned that a 0.45% decrease in the GDP, it's only the one which is almost guaranteed, it is just the minimal decline. But if you take into consideration the decrease in asset values, which are related to the stock market just in general, even commodities and things like this, then the entire decline of the US GDP can reach up to 0.85%, almost the entire percent. And traditionally, if the stock market declines 20% or more, this will be called a full-blown recession on the US market, but these are the numbers which we guys already previously knew, they just pretty much reiterated the facts. And if you remember, several weeks ago we already saw a first signs of the correction. For example, Nasdaq indeed went into the correction zone. The S&P 500 was almost literally around the corner from the correction. Then a little bit relatively good news and data started to pour in. People started to buy back in their positions, locking in some profits and entering at a little bit lower cost basis, which eventually prevented the market from going down even further. Because let's be honest, nothing catastrophic happened so far. But so far, there are some underlying concerns that traditional media is not speaking about that much. For example, the US corporate bankruptcies, Chapter 11 bankruptcies, have reached the biggest levels in the last 13 years, as you can see from this graph. And I think it is going to be a big understatement that US entire financial system relies heavily on US corporations, so these two things are obviously directly related. If the bankruptcies continue, this can only worsen the financial situation. And just one of the reasons why this graph can continue going up, if interest rates will remain the same. It is highly unlikely that during September FOMC meeting they will not start cutting rates, but just let's fantasize. If they do stay the same, a lot of companies and corporations which are right now barely staying afloat and they're making high interest payments, well, once again, the bankruptcies will continue. So, the decrease in interest rates, the cuts in the interest rates during this September FOMC meeting at this point are pretty much mandatory. According to Reuters poll, 55% of market participants are expecting 3 rate cuts by the end of 2024, one in September, another in November, and the final one in December. 34% of respondents are only expecting 2 rate cuts. And only approximately 1% think that there will be only 1 rate cut. And that's it. And approximately 10% of market participants, they think that the total interest rate cut by the end of 2024 will equal to 1 entire percent. And speaking about the very first rate cut, which will very likely happen already in September, or at least they will be announced, right now the estimations, the probability of this happening is approximately 69.5%. So we might see the first rate cut of 0.25% pretty much in the next week or two. And to answer probably the main question of this video, will the Federal Reserve intervene sooner to try and save the economy? Honestly, I would personally say no. I think they will go along with their strategy, they will do as many rate cuts as they originally planned, most likely it's going to be 2, maximum 3 of them, and well, that's the financial situation they're experiencing right now. Once again, we do not see any contingencies, we do not see some uncertainties. The economy is going more or less in the direction where the Feds wanted to go, obviously, unless any black swan event happens. So guys, please let me know down below in the comments what do you think, and as always, thank you so much for watching. Please like this video, subscribe to my channel if this was interesting and informative for both, and see you tomorrow.